Ladies and gentlemen, good day and welcome to Antony Waste Handling Cell Limited Q1 FY’25 earnings conference call. This conference call may contain forward-looking statements about the company which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Jose Jacob, Chairman and Managing Director of Antony Waste Handling Cell Limited. Thank you, and over to you, sir.
Good afternoon, and thank you for joining us for our Q1 FY’25 earnings conference call. With me, I have Mr. Mahendra Ananthula, our Group President, Mr. Subramaniam, our Group CFO, and SGA, our Investor Relations Advisors. Our investor presentation for Q1 FY’25 is now available on the website of the stock exchange and also on our company's website. We are pleased to report that we began FY’25 on a strong note, with operating revenue for Q1 FY’25 reaching rupees 198 crores, reflecting an 11% growth compared to the same quarter last year. Our total revenue, which includes income from the sale of recyclable, refuse-derived fuel, and contract revenue, stood at 232 crores. This growth is driven by enhanced operational efficiency, higher tipping fees, and increased revenue from fixed shifts, trips, and household fees. Revenue growth was led by the sale of power generated from our waste-to-energy project, which was further supported by a steady contribution from our new collection and transportation project in Panvel and power shipping projects in Nagpur and PCMC. For Q1 FY’25, our EBITDA was 55.3 crores, representing a 6% year-over-year increase with an EBITDA margin of 23.8%, in line with our expectations, reinforcing our confidence in the stability and long-term growth of our business. I would like to express my admiration for the Government of India's recent budget announcement, which emphasizes a positive approach to urban development. The initiative to partner with state governments and multilateral development banks to improve water supply, sewage treatment, and solid waste management in 100 major cities is truly commendable. This strategic focus on bankable projects reflects a strong commitment to sustainability and financial transparency, ensuring long-term benefits for urban area. Thank you, and I am now turning to the operational aspect. Let me get Mahendra in. Mahendra, over to you. Thank you.
Thank you, Jose. I would like to provide an update on the operational performance of Antony Waste Handling Cell. We are proud to announce a remarkable achievement with our waste-to-energy plant load factor reaching approximately 89% during the recently ended quarter. This marks a significant increase from approximately 71% achieved in the previous quarter of Q4 FY’24, reinforcing our confidence in the efficacy of waste-to-energy technology being used. As we move forward, we remain committed to building on this momentum. This success is also making us confident to plan for more waste-to-energy plants in other cities. During this period, we successfully managed approximately 1.18 million tons of waste, reflecting a notable 6% year-on-year increase despite completion of Mangalore CNT and Greater Noida biomining projects last year. This growth was driven by the successful execution of newly acquired contracts, increased volumes at existing CNT sites, and a rise in tonnage processed at our waste processing sites. In Q1 FY’25, our PCMC waste-to-energy plant produced over 27 million green units, contributing to our mission of reducing dependence on fossil fuels and lowering carbon emissions. This accomplishment not only boosts our revenue growth, but also aligns with our mission to foster a greener future through innovative waste management practices. We also achieved a record sale of about 34,000 tons of RDF in Q1 of FY'25, marking a strong 23% year-on-year growth. This significant figure underscores the high calorific value of our RDF, making it an effective substitute for coal and helping cement companies meet their alternative fuel requirement objectives. We expect this growth momentum in RDF sales to continue. Compost sales for the same period reached approximately 6,000 tons, with further improvements anticipated as the monsoon season progresses in Maharashtra and Gujarat. Looking ahead, we are excited to announce the launch of our construction and debris project in Mumbai on 14th August. This initiative is very timely, given the increasing need for effective management of construction and debris waste in the region. The establishment of our processing unit will address these challenges and contribute to sustainable practices by recycling and repurposing debris, thereby reducing the environmental impact associated with waste disposal. Furthermore, the Ministry of Environment, Forest and Climate Change recently issued draft guidelines for public consultation, proposing that property developers and infrastructure companies use 20% recycled materials in their projects. A strong positive for this area of waste management going forward. We are deeply committed to addressing the challenges of environmental, social and governance, that's ESG in short, in our business. Environmentally, we have made significant strides by cutting carbon emissions, increasing recycling and optimizing resource use through innovative technologies. In Q1 FY'25, our Scope 1 emissions were about 6,200 tons of carbon dioxide equivalents, and we avoided about 3,300 tons of carbon dioxide equivalent by switching to renewable energy, which is akin to removing 725 cars from the road for a year. Socially, we engage actively with our employees and communities, boasting a diverse workforce of about 10,452 employees, with gender diversity between 2 to 4% across sites. Our attrition rate remains low, supported by over 1,875 hours of training in Q1 of FY'25. We also collaborate with local organizations to promote education, health and environmental awareness. On the governance front, our strong adherence to ethical conduct, regulatory compliance and risk management is reflected in our robust framework. Our community grievance resolution mechanism ensures responses within 24 hours and diversity is present at 17% on the board and 33% among key management personnel. Additionally, we have initiated a materiality assessment based on GRI guidelines to better identify and prioritize ESG issues, shaping our strategy and reporting. We remain focused on driving sustainable growth and enhancing our operational efficiency. We are confident that our proven track record, innovative approach and dedication to excellence will continue to be our key strengths in achieving our goals. Thank you, and I now hand over the call to NG for financial highlights.
Thank you, Mahendra. Good afternoon, everyone. In line with our assessment following the completion of bulk of our capex, we have seen a steady improvement in our EBITDA margin. Over the last 2 quarters, we have demonstrated steady improvement in the reported margin, which now stands at 23.8%. And we believe this range of 23 to 24% will serve as a base going forward. In the first quarter of 25, the company experienced strong revenue growth, with operating revenue reaching 198 crores, marking an 11% increase from 178 crores in the same quarter last year. Excluding contract revenue and other income, but including other income from sale of recycled RDF, the total operating revenue stands at 232 crores. On a steady state basis, adjusted for the loss of revenue from completed projects, like the one in Mangalore and Greater Noida, the company would have reported a total revenue growth of approximately 10% as compared to the 3% reported. We have observed a notable shift in our revenue distribution from first quarter 24 to first quarter 25. In the first quarter of 24, our revenue breakdown was 55% from MSW collection and transportation, 23% from processing, and 21% from contracts and others. In last quarter, we have shifted this to 59% from C&T, 26% from MSW processing, and 15% from others and contracts. In the first quarter of 25, the total contract revenue amounted to 35 crores, which is down from 49 crores compared to the same period last year, and 22 crores in fourth quarter of 24. The group has achieved a consolidated EBITDA of 55.3 crores, reflecting a 6% increase from 52 crores in first quarter 24 and a strong EBITDA margin of 23.8%. Finance costs rose from 7 crores to 13 crores and depreciation has increased by 56%, primarily due to the commercial launch of the waste-to-energy plant. As of June 2024, the group's gross debt stands at approximately 389 crores. With cash and bank balance of approximately 80 crores, this results in a net debt of around 308 crores. This indicates a net debt to equity ratio of 0.4x. During the quarter, the company has received a 25 crore capital grant from the WTE client, which was applied towards the project debt. The weighted cost of debt for the company stands around 9.3%. We are pleased to report that adjusted for the collections received to date, our DSOs now stand at 79 as compared to 115 as reported at the end of the quarter. This reflects a noteworthy improvement in our cash flow. This, coupled with the grant receipt, makes our financial flexibility stronger. With these factors and the expectations of upcoming projects, the company remains confident in maintaining a sustainable growth of around 20% in CAGR in its core operating revenue outlook. That concludes our remarks. We would like to open the floor for Q&A.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Janvi Dodai from Equitas Investments. Please go ahead.
Hello. Hi, sir. I would like to congratulate you on the good set of numbers. I had a couple of questions. So you just mentioned that we have a cash of around 86 crores with us, and the capex lined up for the current year is 20 crores and 5 to 7 crores for tire and car recycling. So what are we planning to do with the remaining cash?
Yeah, hi. So the remaining cash is currently used as margins for our existing projects. So we are currently using excessive margins to kind of bid for new projects, which kind of acts as a buffer when we go for financing institutions to give us bank guarantees and earn us money deposits when we bid for projects. So this money is being used for that purpose.
Okay, all right, understood. And sir, any updates on the Chennai project, and what sort of traction have we started seeing in tenders post-election?
So the Chennai project is still on. I mean, the submission date is going to be sometime later this month. As far as other projects are concerned, there is another large C&T contract in MMR region that we have submitted, the results of which are expected shortly. Currently, the evaluation is in progress. Apart from that, there are a few more C&T tenders in Thane and Chennai as well, which are in the pipeline.
Okay, all right. So this quarter we can see some of these projects closing, and
one of the projects is likely to close in this quarter. At least one large C&T contract is likely to close.
Okay. All right. And so one more question. So since the last two quarters, there's a tax adjustment that we're taking of the deferred tax asset on the balance sheet. So what is the tax percentage that we're looking at for the current year?
This would be in the range of our now new adjusted tax rate of around 25%. So the company has shifted all its historical companies and subsidiaries to the new tax regime. So a 25% tax rate will be applicable for all our companies except for one processing company, which will shift to the new tax regime in 2028.
Okay. And sir, one last question. So, in the lines of EBITDA margin, even if we clock 23-24%, from last year we've essentially doubled our interest cost as well as the depreciation because of the capex. So on the bottom line, we essentially don't see anything flowing. So is the understanding of having flat numbers on the bottom line is correct?
So the first part is correct in the sense that because of the capitalization phase being over and the commercialization phase kicking in, there is a jump in interest and depreciation cost. But with the 25 crores of grant coming in, we have applied that towards the debt repayment. So we foresee that the interest cost would ease going forward. That is phase one. Second phase is, yes, I mean that the increase in EBITDA will not directly transfer into an increase in PAT because of these two line items.
Right. Okay, sir. All right. Thanks. I'll get back in the queue for more questions.
Thank you very much. The next question is from the line of Nirav Dalal from MIB Securities. Please go ahead.
Thank you for the opportunity. I just wanted an update in terms of the new initiatives that the company is looking at, say the tire, the vehicle scrappage. Any update from the company as well as anything coming from the government?
Yeah. So as we had mentioned last time and also in one of the recent interactions with investors, I mean, we have decided to buy land. Earlier, our plan was to take land on long-term lease. We figured out that probably that's a risky option from the sustainability perspective, especially because we'll be making certain investment in immovable assets. So that's the reason why we have decided to buy land. We are looking at MIDC industrial parks in and around Mumbai. We have zeroed down on 3 or 4 locations, and very shortly we should be closing the deal with one of them. That's going to be an integrated site for both vehicle scrapping as well as tires.
Got that. But what would be the investments? Any indication?
So
the investment will be in line with what we had announced. It will be around 20 to 28 crores for both the projects and maybe an incremental 8 crores to scale up the entity.
Got that. And just one last one from me. We've seen a QOQ decline in the MSW CNT. I think the number of days would be similar. So what would have been the reason?
The decline that you are saying is mainly because in the past we had Mangalore as one of the CNT player, a site in which we were operational. The contract got over and we didn't extend the contract. So that is why you are seeing an absolute fall in the YOY tonnage handled and the CNT part. But if you were to adjust that and look at the revenue adjustment for the revenue loss from Mangalore and the Greater Noida processing entity, it's up 10% for us. So we are seeing a steady growth in the organic tonnage that we are working in the existing sites.
Got it. When you say 10% growth is on a
So if I were to adjust the last quarter's revenue for Mangalore and Greater Noida processing, if I were to strip that part out, then if I look at currently performance versus the previous performance, that's up by 10%.
Okay. Thank you.
Thank you very much. The next, ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Aryan Oswal from Finterest Capital. Please go ahead.
Hello.
Hi.
Hello. Am I audible, sir?
Yes.
Yes. So, sir, my question was, can you throw some light on the revenue guidance and margins for FY'25?
We would be clocking around 14 to 18% of growth on core revenues, and this excludes sale of compost, RDF, and because those are something that we will expect a sharp change in the second half of the year. we will be looking at 6 months of revenue, as Mahendra mentioned, with the start of the construction and debris project. So 6 months of revenue should come in. So those will kind of give us more comfort. So we are looking at around 18% growth on the top line. And EBITDA margins should be around the levels that we have clocked for Q1, which is around 23 to 24%. That is our planned internal hurdle rate.
Okay, sir. And sir, we have seen a massive increase in long-term borrowings from 102 CR in FY'22 to 307 CR in FY'24. So, decreasing this, and why are any plans, or there are any plans to increase this?
So the increase in the long-term borrowing over the last 2 years is primarily due to setting up of the 14 megawatt waste to energy project in Pimpri-Chinchwad. So that was the main reason why there was increase in debt. Going forward, on a steady state of affairs, if the company doesn't bag any contract and we have a decent cash flow, we will completely be debt-free in the next 4 years time frame. So any incremental debt that the company will have to borrow will be only after bagging new contracts, which will be revenue generating in nature.
Okay, thank you so much, sir.
Thank you very much. The next question is from the line of Rohit Maheshwari from Tata AIG. Please go ahead.
Good evening, sir. Good set of numbers. So first question is, what type of revenue, what we can expect for construction debris for current year and for the next year?
So on an annualized basis, the first full year of operations, we will have a revenue of about 30 crore per year, 30.
And this 30 crores, what type of margin will be making on this 30 crores?
Similar to that.
We will be doing slightly better than our existing margins that is being reported on a weighted average, because there's a % of processing involved and there's also collection transportation. Also, this 30 crores of annualized revenue doesn't involve or include any sale of byproduct revenue, because we are being cautious at this point of time. But with the new guidelines coming, wherein up to 20% of materials needs to be from recycled sources for construction and development phase, we believe going forward, not immediately, there will be a decently strong, vibrant market for the byproducts here.
So that will be an upside. So when that happens, that will be an upside.
Okay. So second is, can you throw some light on the newer project, like asset turn? What is the potential? What type of ROE we are going to make on those projects? Some feeler, what is the upside? What we can see on those two projects, and what will be the year we should look at for that project to have a meaningful impact on the company?
I guess you're talking about the vehicle scrapping and tire.
Correct.
So that project, we expect that should be commissioned sometime in the next financial year. In terms of the margins, looking at the kind of competition or looking at the kind of margins which the current companies are making, existing companies are making, that's in the range of about 8 to 12% of EBITDA margin.
And just the asset turn, let's example, you are going to invest 20 to 25 odd crores. So what will be the asset turn for those 25 crores investment?
So the asset turns will be a percentage of capacity utilization, Rohit. So as the project scales up and a lot of more vehicles start coming into the scrapping policy, this will improve drastically. It will be, today we are just guessing that we'll be happy with a 1:1 kind of a ratio, but the fact is, if you look at developed economies, it's anywhere between 8 to 14 times on the fixed asset turn. In India, we are just on the verge of having a policy, getting people's acceptance to go for scrapping the vehicles. It's a big tipper. For example, people still prefer to go to a Cars 24 to kind of sell their vehicles, second vehicles, before they buy the new vehicle. But going forward, the scrapping policy will be accepted by a wider market. So that will be the tipping point for us.
Okay. So the last question from my side is, can you just give some light how big one contract which you think that you'll be closing in this quarter of CNT can be? Like in terms of how big that contract is?
So the largest contract that we are currently doing, which is on the extension phase, contributes to 3% of our total operating revenue.
Okay. Fine. Thank you.
Thank you very much. Before we take the next question, a reminder to all the participants that you may press star and 1 to ask a question. The next question is from the line of Bhavya Gandhi from Dalal and Brosh Stock Broking. Please go ahead.
Yeah, hi. Thank you for the opportunity. So basically just wanted to understand the size of opportunity when it comes to construction debris, vehicle scrapping and tire recycling. I know it's a reiteration, but just wanted to understand, is it far better than the municipal solid waste? And as we're entering this business, do we have any moat? Because in the MSW, it's moated because there are very few organized players. So in terms of capital allocation, if you can help me understand. Yeah.
See, our mode basically is that a typical construction debris project, and that's a trend that we have seen across cities, is that these are integrated contracts. So very unlike MSW, where clients come up with two different packages, two different contracts, one for the CNT and the other one for processing. The CNT projects are typically integrated, including our Mumbai project. So that's our core skill. I mean, we are one of those few companies who are strong both in CNT as well as processing end of things. So that's why we think that we have an edge in efficiently managing such contracts.
I mean, when you say integrated, is it like CNT plus processing? That is what you say, right?
That's right. That's right.
Right. And in terms of processing, typically it's, it's like the traditional processing, or is it a difficult process one needs to go through?
So this is a different type of processing, as in that there are two parts of processing here. One is called dry and wet processing. So you require different kind of pressures and equipment. That's something that we have procured from a leading international firm called CD Asia, who also incidentally had experience of setting up similar projects in other cities.
Right. I mean, is it possible to quantify the size of opportunity? Say MSW is closer to 4,500 crores of market, right? And if you can quantify for construction debris and similarly for vehicle scrapping and tire recycling.
The CND thing, I mean, if you purely go by the Mumbai project, and there are two contracts in India, two contracts in Mumbai. So this is about so a city like Mumbai produces about 1,500 tons of construction debris waste, and we were looking at this study which is done by Building Material Promotion Council. Their estimate is that about 150 million tons of CND waste is generated in India every year. So even if half of it is done, I think it should be 5,000 crores or something.
Okay, 5,000 crores in terms of amount you are saying, right?
Right, yeah.
But in terms of contracts awarded, right now I believe none of the construction debris are getting recycled. They are either getting into landfills or not getting recycled, right? Is the understanding right?
Mumbai, yes, is typically used by builders to send it to low-lying areas for dumping, and that's what BMC wants to stop it. So that's why they have now come up with these two tenders, and we are doing it for the western suburbs in Mumbai city. Having said this, a city like Delhi, which is as big as Mumbai, if not smaller, they have 4 operational CND projects already. So going forward, we are seeing that lot many of cities now are, apart from MSW, they also are structuring their CND waste management.
Okay. And similarly, sir, if you can throw some light on vehicle scrapping and tire recycling as well. I know it's difficult to quantify, but just a broad assessment, how the industry will pan out going forward. And do we have any moat over there as well? Yeah.
So as you rightly said, it's very difficult to put a number to it because it also depends on how strictly the regulation is implemented. But we expect, and especially when it comes to adoption of regulation, we have seen that the big metro cities and tier 1 cities are the first one to adopt. So that's where we think that's the direction it will take. But gradually, over and above that, gradually we see that over a period of time, more and more cities will be very strict about implementing this regulation. So people will not have the option of selling it or sending it to the hinterland for the usage. Once the effective life as per the regulation is over, they will be forced to scrap it.
Possible to quantify the opportunity size?
There are no official studies per se, this thing, but we think it is again going to be going forward because we are talking about passenger vehicles as well as passenger vehicles and HCVs, trucks. So that thing is going to be as big as 10,000 crores over the years.
Okay, and are there tenders which have been already floated, or are we seeing on an increasing trend in terms of tenders?
So these are not going to be tendered, and this is one of the reasons why we want to get into this business. The government of India has come up with a regulation which is in turn supported by the various state governments. So one has to apply for the license to set up this facility. So this is not going to be a tender; it's going to be, you can say, a merchant plant based on the license that you get from the state transport department.
We got it. And in terms of ROCs, do you expect, is it going to be far better than the existing business, or is it going to be lower than the existing one?
I think that's good.
So this would be depending upon the scalability and the growth of the industry. Looking at the capex that is being put on play, the downside is very limited for the company right now, and we see the potential to grow significantly higher. As and when the adoption and the technology improves, we will definitely see those margins be similar to what we already have in our books. We spoke to a large number of players, and we understand that the potential is very high, and the numbers should be very similar, if not better, than what we already report in our waste processing section.
Right. Just one last thing, if I can squeeze in. As investor community, how we look at recycling business as a capex heavy business. So are there any trends where government is, sort of putting in some money or infusing capital where it becomes more of an asset light vis-a-vis, the company wanting to put in more capital? So is there any trend that we are seeing?
Trend is there in, I would say, collection and transportation contract, the CNT contracts, wherein some states, some cities, based on the funding they received from the central government, they decided to buy trucks and vehicles and given it to us for O&M. So that is the asset-light model. So 3 of our projects, Varanasi, Jhansi and Panvel, already have this model, wherein all the vehicles are provided by the respective corporations, and we are responsible for using them and responsible for O&M during the contract period.
Also in the processing section, we have seen viability gap funding coming in. For example, the one in PCMC, there is a 50 crore VGF given. So similarly, newer projects in processing, and taking a page from the budget announcement, there are a large number of multilateral funds which would like to come in and subsidize the cost to the waste processing section. So going forward, the trend is to kind of either come out with a VGF or part capex reimbursement or an EPC kind of a model for waste processing. So it need not be 100% funded as it has been done currently. The things are definitely changing.
Right. Got it. Thank you so much. That's it from my end. Yeah. Thank you.
Thank you very much. The next question is from the line of Manav Vijay from M&V Investments. Please go ahead.
Yes, thank you very much, sir. So, sir, my first question is regarding the PCMC project. So, the grant that you're supposed to get from the municipal corporation was 50 crores. 25 is what we have received. So, what is the status of the rest 25 crores?
So the first 25 crores is doing the first two milestones of setting up the plant and getting the plant operational. So that 25 crores has been received. The second batch of 20 crores is based on complete commissioning of the plant and the acceptance of the units at the client's end. So which the client is now auditing and getting it confirmed. The last component of the grant, which is 10% or 5 crores of the amount, will be given to the operator after 12 months of COD, which is the commencement operation. You will get it after 12 months.
Okay. So, sir, my second question is regarding this project only. So, in this project, I believe we had an overrun of around 50 crores. I think in last call you mentioned that you are coordinating with the municipal corporation to figure this out. So, any update on that as to whether the authorities have accepted the cost overrun or not?
So the cost overrun calculation has already been submitted to the independent engineer who has already audited the numbers and given it to the corporation. So the tender gives us an equity IRR which has been assured. So based on the due diligence and the study by the independent engineers, and the corporation might ask for a second opinion on that, the same will be taken on board.
So my next question is regarding the sales growth guidance that you have given, specifically on the core revenue. So you have mentioned around 14 to 18%. So sir, FY'24, we had around 780 crores of core revenue. So let's say if we take around 15-16%, we are looking at roughly 100 crores of additional revenue. So in this, so for the year, I believe that apart from the WTE project of PCMC area, which will contribute something on your top line, is there anything else that you can help us to understand will help us to achieve that 14 to 18% sales growth?
Okay. So based on the contracts that we already signed and in phases of scaling up or yet to start, we will be seeing revenue growth coming in incrementally from Panvel, then we have from the Sidco biomining and the CND business. So all these three revenues plus 12 months of operation on the WTE gives us that kind of revenue visibility.
Okay, fair enough. So the next question is regarding the debtor days that you have. So sir, the PP that you have issued, so in 9 quarters we have moved from 77 days to 115 days. Okay. Last quarter also you had mentioned in the call that although on the reporting basis we were 103, but during actually during the quarter we came down. Again, this same comment was actually mentioned in this quarter as well. So sir, I just want to understand that how should we understand this thing on a slightly longer term basis, whether we will actually come down below 100 days or the 115 days sometime during this year, next year on a sustainable basis, or this number of 110 or 115 days is here to stay?
We believe that till the time the elected members or the standing committees are formally done, there will be some bit of uncertainty on the funding allowed by the departments. Currently, they are using this allocation based on certain judicial bodies. Since the elections are yet to happen in bulk of the municipal corporations, which will happen only after the state elections, so we expect the DSOs to be slightly stretched during the reporting days. But after the cycle, I mean, we normally have seen that the collection then recovers later. So since the cutoff date for reporting is on 31st of March or 30th of June, those numbers kind of appear spiked up. But later on, the fund gets released and we come back to a normalcy on a 79 to 82 days kind of a scenario. So that is what has been the trend historically. Having said that, these are essential services contracts and the work, the budgetary allocation is given on a priority for these sectors. But in the absence of elected members, the machinery for departmental allocation is slightly getting stretched out here.
Okay. Yeah. Okay. So the next question is regarding the vehicle details that you guys provide every quarter in your PPT. So specifically 2 vehicles I'm asking. First one is a big tipper where you have moved to 91 versus 76 quarter-on-quarter. And second is a dumper balancer which has moved to 53 versus 48 quarter-on-quarter. Now I believe these are large vehicles and they're expensive machines. If you can just help us understand these two specific items, where these machines will be placed, sir?
So these are predominantly used in the collection transportation businesses. So both in Panvel and Nashik, where we have got these assets, the count has increased and these have been deployed in these two collection transportation sites.
Okay, fair. And the last question from me, sir, in the last call you had mentioned about doing a contract with actually one FMCG company as part of the EPR mandate. If you can just help us to understand any update on that.
That thing is still not closed. I mean, as we mentioned last time, that the company was seeking some approvals from their head office. So they still have not got those clearance. So that thing is still pending.
Thank you and all the best, sir.
Thank you very much. The next question is from the line of Prakash Kapadia from Spark PMS. Please go ahead.
Yeah, some data keeping points. On the core revenue, what is the core EBITDA and core margin?
So on the core EBITDA, we would be having if we have only 11 crores of project revenue and less than that in that sense. So the core margins would be around 24% for us. So it's not going to be very significantly different than what has been reported in the EBITDA numbers for us.
Okay. And if I take that to core revenues, it will be approximately 47 crores kind of an EBITDA for the quarter, right?
Yes.
Okay. And, on the volume process, if I were to get a breakup of MSW CT and MSW processing, would you have that handy?
I think we have mentioned that in the business update that was circulated. I don't have it right now in my system, but it's already mentioned the split between the total volume handled of 1.18 million, the split between CNT and waste processing.
Okay. And as we move forward, for the core business, any potential, new cities or tenders in the pipeline which could add to our revenue growth in the near future?
So as we mentioned, there are a couple of tenders that we are working on. One large CNT contract proposal has already been submitted, the results of which is expected any time this quarter. So that thing should add to our revenue.
Okay, so by the end of Q2 we should know.
Yeah.
Okay, thank you.
Thank you very much. The next question is from the line of Ketan R. Chedda, a retail investor. Please go ahead.
Hi, thank you for the opportunity. My first question is, one is on the disclosure. Would it be possible to provide the CFO numbers for every quarter? The reason why I ask is because every quarter we see fluctuations in the net profit numbers. So it would be very helpful for us to, if you could provide the cash flow from operations, the net cash flows every quarter. Would that be possible to provide as a disclosure? Hello?
Sorry, you are on mute. So we normally have a very unaudited or undraft numbers which we use internally. So that will be anywhere in the range of around 25 to 30 crores, depending upon the seasonal pattern and the working capital cycle. So since this last quarter we had a stretched receivables, we were down to around 18 odd crores in CFO at Concall level. But that is after a deployment and everything. So normally we have a EBITDA to cash conversion of around 88%.
No, my request was more from the perspective of if you could provide these numbers on a quarterly basis, that helps us to kind of keep the tracks in relation and in correlation with the other figures that you normally report. So that was the request.
See whether that is doable on because we have around 8 subsidiaries and everything. So let me try if we can have that, and then we can have the same thing populated and share it with the audience at large.
Yeah, that would be very helpful. Thank you. And the next question is, with respect to the WTE project in Pune, could you tell me what is the debt currently right now for that specific project?
148 crores.
Sorry, say again?
148 crores.
148, okay. And this will we still have about 30 odd crores of VGF to be received.
We have around 25 crores of VGF to be received.
Okay, right. Okay. So once the VGF is received, this debt number could go down further by that amount.
Yeah, the EMI schedule starts from October, so even gradually we will start repaying the debt over the next from October onwards.
Okay. And the next question is, could you provide a composite revenue number for your compost and RDF sales in this Q1 25?
So that would be a very, we don't have it disclosed ready, but I think we can share it with you post the call. We'll just hand it over to our SGA team and they will kind of reach out to you with that.
That would be helpful. Thank you so much. Yeah, thanks. These were my questions. Thank you.
Thank you very much. The next question is from the line of Amit Kumar Rajput, an individual investor. Please go ahead.
So my question is on the debtor days. If we see from Q3 FY'23, we have a constant increase on the debtor days. Could you share some, what's the reason behind it? Could you tell me?
So normal receivable cycle is slightly stressed because of the people who are authorized to release the payment need to get grants from the central allocation department. Since there are no elected members in bulk of the municipalities where we operate, the decision making is taking time, and that is why you are seeing an increase in debtor days here. Once the elections at various municipalities gets completed, then this will again go back to our historical average around 70 to 90 days.
Thank you for the answer. That's all from me.
Thank you very much. The next question is from the line of Aryan Oswal from Finterest Capital. Please go ahead.
Yes, sir. Thank you so much for taking my question, sir. Sir, as you anticipated the MSW market to get doubled by FY'26, and we are going good on that. So I would like to know that how are we looking at the market to grow by FY'30?
MSW market growth over the next 5 years.
Yes, sir. Yes.
I think the MSW, as we mentioned earlier, that earlier the municipalities were only looking at solid waste management, the wet waste and dry waste as their responsibility. Increasingly, most of the cities have also realized that with the increase in real estate development and redevelopment projects, the construction debris is going to be another big headache for them. So that's why we see that segment getting added. So I think these three segments going forward and will definitely increase the market size. Even on the processing side, most of the cities earlier were not convinced about waste to energy kind of capex heavy processing solutions. But now India has about 10 or 11 operational waste to energy projects. So that also is giving confidence to people, to cities to go for such projects. So all that is going to contribute to the increase in market size. That's one. Secondly, on the softer side, with the kind of competition which Swachh Bharat Abhiyan surveys done by Government of India has the atmosphere and the environment that is created, that most of the cities now taking it very seriously to be on top of that list. That also is enabling them or forcing them to subcontract or engage experienced service providers for their waste collection, transportation and processing activities. So I think all this combination of soft and hard facts is definitely going to make the market rise much sharply than the last decade.
Okay, thank you. So, sir, can we expect the market to grow another 50 to 75% from here?
On a lighter note, I mean, that could be an economist's delight. We would like to hope that the market sees that kind of growth. But it's difficult to, again, as I said, put a number to it.
Oh, okay, sir. Thank you so much.
Thank you very much. The next question is from the line of Sevant Bomanagari, an individual investor. Please go ahead.
Yeah, last quarter we were talking about the Chennai project, right? Any update on that?
The Chennai project, the process is still on. The bids have not even submitted. It should be, the submission date is somewhere later this month.
Yeah. So thanks. My second question is are we bidding any more other projects other than that one?
Sir, your voice is not clear, sir. Can you please repeat the question and a bit louder, please?
Are there any other tenders that we are trying to bid?
Yes. So as I mentioned earlier, there are few, apart from the Chennai project, there are few CNT tenders, a few biomining tenders which are currently on. That's what we are looking at.
Yeah, thank you.
Thank you very much. The next question is from the line of Bhavya Gandhi from Dalal and Broche Stock Broking. Please go ahead.
Yeah. Hi, sir. Thank you for the second opportunity. Just wanted to know how much would be the incremental debt if we were to assume new contract wins. So any rough estimate if you can, and what sort of ROC or ROIC are we looking at for the newer tenders? Yeah.
So depending upon the contract that we win, if it's a CNG contract, we can go up to 90% of the total capital employed as debt because vehicle financing is easy. So given the asset turn of say 1:1 or 1.25:1, if 100 crores is the annual turnover, we would have to go up to 90 crores of debt for 100 crore of annual turnover in that sense for collection and transportation. Waste processing is a completely different ball game. Depending upon the technology and the size and scope, the normal debt equity for large scale waste processing projects are in the range of 70 to 30, 70 debt and 30 equity. With capital grant and viability gap funding, that will be the ratio. So depending upon each project, it will be very difficult to generalize the amount of debt that needs to be borrowed. Right, but that will be borrowed only after you bag a contract, so you don't have to procure assets and be ready. There's no need for that.
Right. So are we looking at processing contracts also? Because nowhere it was mentioned. I believe you mentioned about CNT tenders and biomining tenders, right? Or is the Chennai one processing?
Chennai is a processing one. Yeah.
Oh, okay. Sorry, I missed out. Yeah. Thank you so much. Yeah, that's it from my end. Yeah.
Thank you very much. Ladies and gentlemen, due to time constraint, that was the last question for today's call. I now hand the conference over to Mr. Jose Jacob for closing comments.
I wish to thank our committed team whose tireless efforts have played a pivotal role in accomplishing our goals. We are continuously building on our capabilities to enhance our operational efficiency and service delivery. Our unwavering focus remains on delivering consistent operational and financial performance while creating long-term value for our shareholders. By investing in innovation and leveraging our expertise, we aim to strengthen our position in the market and drive sustainable growth for the future. I am optimistic that our path towards a cleaner and greener future will be marked by continued success. Thank you.
On behalf of Antony Waste Handling Cell Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.